Let me do a quick sound check. I am, we're doing a first time ever. I've got the room set up with the link that we sent you guys, but I'm also dual broadcasting in some of the other rooms in case there are people in those rooms as well. So I hope I'm coming through and everything sounds good. Let's see. Okay, all clear. Good. Vaughn, if you are getting a reverb, you probably have more than one room open. So, Robert, some of us never leave. Yeah, I did not think I was actually going to broadcast in the bias room, but I am. So anyway, all right. So we are good to go, and we are coming off of yet another crazy day. These days, it is. If you're on the right side, it is a beautiful thing, and you probably go home and open a bottle of champagne, and it's just so easy to make money and all that kind of stuff. And then you get on the wrong side, and we all know how that feels, right? So what we're going to talk about today is trying to have consistent income, and more than that, trying to prep and prepare and think about how we are going to trade for 2019. So with that, let's get started. Welcome again. Thanks everybody for being here, taking the time. It is Friday afternoon, but we're going to keep it short and sweet. Got a lot of good information here, got some cool trades to show you. But I want to talk about 2019 and what it's going to look like compared to 2018 and in the past. How's it going to be different, and how to trade it. So first of all, we start with the disclaimer. Normally, I mean, on one like this, don't really need it, but we are going to talk about some returns. So I have to show this. Past performance is no guarantee of future results, all that kind of stuff, because we're going to look at some actual trades. All right. So which side of the street do we want to be on here? The success lane or failure drive, right? And the reason I'm saying this is, of course, how are we all holding up? And I can't even look at this without just busting out laughing. If you guys know Tommy Boy, that's what I feel like some days. I come in and I'm like, what just happened to the market? We were up 80 points in the S&P today. It's just nuts, right? This is not normal. It's just not normal. Normally, quote unquote, normal market in the past, we've had, S&P moves of 35, 45 in a week. And now we're getting 50, 60, 80, 100 points in a day. And not only that, it's back and forth, up 40, down 50 during the same day. So I know everyone has felt this way before at some point in the last month, because it has been really hard to be on the right side on a consistent basis. Anyway, all right, so let's get to it and look at the craziness of 2018. As we know, we've talked about this. I've got this burned in my brain. And as a matter of fact, I have a good friend that sent me a picture at Christmas, and he had drawn the Santa's reindeer and things on here as a Christmas joke. But anyway, so this movement that we've had here lately is much more extreme than we had even over here in January. And we thought this was bad, right? This was nothing compared to, what we're going in now. And even this, I'm not sure we've seen the bottom of this yet. Of course, we had a great day today, and we'll talk about that in a little bit, but does this roll over? There is a floor, there's a bottom somewhere. I don't know where, or was that it, and we turn up and, keep going this way. I don't know. And that's, no one knows that, and we won't be able to figure that out. We won't know that until it's hindsight. We'll probably know that honestly by like February or March. It won't be in the next couple of days, or probably weeks. Anyway, so this is today. I took a last minute screenshot here. 80 points up. We had, I think, 70 down yesterday, and then I think it was 60 up the day before that. It's a 3-day chart. So this is Wednesday, Thursday, Friday. So anyway, we all know this. We're all living this. It's crazy, crazy, crazy. But let's back up and look at this. I'm a big picture guy. I look at the macro. I look at more of the economy and all that kind of stuff. You guys, if you don't know, I did forget to mention, I've been trading professionally for 30 years, ran a fund, trade on the institutional side. So I've seen quite a few swings in the markets before over my career. So we have been in an undisputed, that's a 10-year bull market, right? 09. And there's some blips along the way, and they look on a larger time frame. It's a 15-year weekly chart. So on a larger time frame, that looks smooth and steady. But all in all, if we look back, that looks pretty easy. And I've said this before, over the last 10 years, you could have, and all this is hindsight. We don't know this. We never know when it's going to end. We don't know when it's going to start and all that kind of stuff. But, it is the, close your eyes and throw a dart and hit something and buy a call on it, and it goes up and you make money and you're a genius, right? And we know it's not that easy. I'm being facetious, but that's the pattern that we've been in. Buy the dip, buy the dip, buy the dip, buy the dip. And it's worked for 10 years, right? So do we think it's going to go back to that after we've had this minor slash major correction that we've had in December, which was the worst December since 1931 or something like that, since the Great Depression. And we dipped down and almost touched 20% in the S&P, but didn't quite do it. So does that mean we come back down? Nobody knows. But the point is, I don't think it's going to go back. I think those days are over. I think that 2019 and beyond is going to be a different thing. Now this, my father subscribes to Kiplinger, and he sent me this. This is from January 2nd. Lower your expectations return over the next decade. And that's exactly the whole point of why we're talking. Things have changed. They're not going to change. They have already changed. They started changing in October with the Fed. It's different, right? How we trade it is going to be different. And that is actually a good thing if you're prepared for it and you know what to do and you expect it. We can't keep doing the same things we were doing. One, because we don't have the direction and momentum and to buy the dips, because remember, we just buy the dip, buy the dip, buy the dip, and it worked. I don't think that works anymore. I think we're starting in a multi-year turning point in the market. We've already started, right? But even if I'm wrong, this has sent shockwaves through the markets at every level, all the way up to the institutional guys. The volatility is jacked up and will remain jacked up. Do you remember way back a long ancient history time ago when, remember the VIX was at 9 or 10? I don't think we're going to see that for a while. I think low VIX now is going to be 14, 16, something like that. So we need to, one, we need to understand that, but two, figure out how the best way to trade that. So what happened before the 10-year bull market? Well, if you notice here, this is a 30-year chart, I think. We get into, now here's the bull market, right? But we get into these kind of markets where we're moving, but we're not going anywhere, right? Let me show you this. So let me do that better. From the peak to peak here to here is about 8 years, 7, 7 years, let's just say 7 years, almost 8 years, right? And from here to here is 5 years, right? So from that point to that point on, if you had a Vanguard 500 index, I mean, yes, reinvest dividends and all that stuff, but for the most part, you're still flat 7 years later, right? Then you tack on another 5 years and you're still at the same point, being at 1,500 on the S&P, right? 12 years, here to here to here, and we haven't gone anywhere, right? I think that's what we're headed for. And I don't like it. I mean, I hate to say that, but I think we're going to have that kind of, maybe not 12 year, but we're going to go into an extended time of chop and volatility and that kind of stuff. Again, if we know that and we're thinking ahead and we're planning for it, that's a good thing, right? Because if we just bury our head in the sand and say, no, Bruce, you're wrong, it's going to do this, and we're just going to keep going for another 10 years, it might not turn out so well. Also, look back before this, and I wish I'd done this chart longer, but each one of these are years, right? So it's 91, 92, 93, 94, 95. We didn't go anywhere. I think we might be getting into something like that. So again, figure out what to do with it, right? And even if I'm wrong, this smackdown that we've had, for lack of a better word, is changed things, right? So think about this. What type of trades do you use? We all use long calls, long puts, debit spreads, calendars, diagonals, butterflies, etc., iron condors. And that never changes. I've been trading for 30 years and I've used these strategies for 30 years. But what does change is how we use them, because you can trade a butterfly 20 different ways. You can trade an iron condor 20 different ways. Each one of these strategies, even long calls, I mean, in puts, you can trade those differently, right? And I think we're going to be in large range-bound swings, over extended periods of time. That's good for premium selling. It's good for a lot of different kind of trades if you use the right trade, right? And elevated volatility. And I remember back not that long ago, maybe 15 years ago, when it was kind of the same thing. I mean, the low on the VIX, and as far as a trading range to set up trades was, 12 to 16-ish, 14, 19-ish kind of range. And we never saw 11s or 10s, for years. And again, I kind of think we might be going in that direction. So we need to rethink the way that we trade. And I wanted to put this on here because I know somebody will say, oh, that's crazy. I'm not saying that the old ways won't work. I'm just saying, because we'll get bounces and all that kind of stuff. And then as soon as everybody thinks it's back to normal, it's when you get your head ripped off. You know how that works. We all know how that works, right? I'm just saying that we need to adapt to the market as we see it going forward, and start really learning and start using the type trades that are going to fit in this market. All right, so we all want to be more consistent. Everybody. That's the whole, above all else, we want to be consistent, right? So what's the first thing? You need a plan. You always got to have a plan, right? And I am amazed at how traders just kind of throw stuff on and there's no rhyme or reason to it. It just, oh, this looks good, and I'm going to go long. Well, I'm going to go short. And I'm going to go long. I'm going to go short. And it's just, and we're all, we're all guilty of that. Because you kind of get focused on a ticker or the pattern of a chart or something like that, but we need to step back, right? So what I do is to try to put together repeatable trades, and I try to have a cookie cutter kind of pattern, and what I want to do is be able to know what strategy that I'm going to use, and I want to know when to enter, when to exit, and I want to know this all ahead of time. and it's all put together in a system, right? So we want something that's repeatable. We want something that's, you know, as easy to follow as possible. So again, I've been doing this for 30 years, and I have a set of trades and a trade plan that fits the kind of market that we're in. And I structure with timelines to give us an entry point and an exit point. Each trade has, you know, entry and exit points of the strategy itself based on time frames. Most people don't use that, but it's very critical to a trade. And it does tend to make it a lot more predictable, right? So again, I think for 2019 and beyond, and probably way beyond, you know, we're going to be dealing with this, right? So let's look out 12, 24, 36 months. And that might freak you out if you are trading, you know, futures or something that's, you know, something short-term time frame, because, you know, I'll day trade and I'll scalp and all that kind of stuff too. But and that's fine with a portion of a portfolio, but I'm saying for the core stuff, you know, we probably need to really, really start thinking a little bit longer term time frames, because you guys have never heard me in recent, you know, history talk about leaps and all that kind of stuff. And I'm saying, you know, drag those old strategies out and kind of dust them off. Covered rights, leaps, longer term hedging stuff. I did a Black Swan class here, I don't know, probably 4 years ago, something like that. Dig that back out. You know, we need to start thinking longer term, right? 12, 24, 36 months. I've got, you know, some exposure to some bonds, to some golds, metals, but I'm going to look even deeper into, you know, sector specific ETFs and country specific ETFs, try to get some leverage and some hedging there, as well as upside, of course. But again, you know, be thinking about this more as a, you know, as a portfolio, longer term, and where, you know, where you need to be 12, 24, 36 months, because as we know, the time will sneak up on us before we know it. And the reason I say 36 months, because you look at that and go, well, you know, options don't even go out 36 months. Well, you know, leaps go out, you know, 18 months, but we do them in a series so that as one is coming off, you're replacing it with another one. So you're kind of leapfrogging positions over. And with covered rights, I don't mind going out far. And maybe I don't even do a covered right. Maybe I'll have, you know, a stock, you know, a long stock that I'm going to hold for 36 months, and I'm hedging it with an ETF, sector ETF that covers that sector, or you know, something like that. But anyway, the whole point is to start thinking a little bit longer term on this. And the next thing is portfolio management, and this is any time, but it's becoming more important now because of the volatility. And I put in here, and this is exactly what happens. And again, we're all guilty of this. You know, when everything's going great and everything's going up, you put a bunch of trades on, and whether you manage by the Greeks or not, you may not realize it. You may have all long delta, which is great when things are going up, but not so good when they're going down, right? And lately, you know, we're going up, then down, then up, and then down, you know, even in the same day or the same week. So it makes it much, much, much tougher. So we need to know how to structure the portfolio. We need to structure each trade so that the trades complement each other and can balance out a portfolio without you having to be all long or all short. And some strategies don't play well together and some do. And you really need to know, and that's a function of the Greeks for the most part. And that's something else that you really need to know. You need to know that anyway, but it's even more important now, right? Last thing on this is defending trades. You guys have seen me, I'm sure, do all kind of crazy defending moves on trades before. And, you know, I call it the Cirque du Soleil move when I'm doing a triple Lindy backflip, whatever, you know, trying to defend a trade. And I will do that if I think the risk reward is there and the setup is still valid. And, you know, in most cases it works. Sometimes it doesn't. We can't control the market. We can't control volatility. But the point is that if you don't know how to defend, your only choice is just to get out. And I know if you're short-term oriented, you know, you have a stop loss, especially futures, you know, and you just, okay, hit my number, I'm out, you know, and that's fine. It's not what I'm talking about. If you have a trade that still has a lot of time left on it or a lot of life left in it, in a lot of cases, it's well worth defending, hanging around and defending it. The next thing is beta weighting, and we're going to talk about some trades. You may or may not know or be aware of beta weighting. It's a good way to spot risk in the portfolio and see where you may be heavily weighted one way or the other. And I will beta weight for each individual trade or position, and then I'll beta weight to the overall portfolio. And you can also beta weight to different indexes that align with what you're trading. For example, if you're trading all tech stocks, you want to beta weight to the NASDAQ, right? Doesn't make sense to beta weight to the S&P as much. So, you know, you can really dial it in to see where a lot of risk is, especially with the movement that we're getting in this kind of market, right? And I forgot to mention too, if you guys don't mind, hold the questions till we get through. This is pretty short. We'll get through this and then we'll get to all the questions. This is much shorter than my normal stuff. If you guys have ever done a class with me, they're usually pretty long, but let's get through this. And I just had been looking at the questions, so I apologize. All right, so let's switch gears, talk about what's working. So double diagonals. There are a few trades out there that have been working well lately. And I mentioned it a little bit in the room today. You know, I'm a big butterfly guy. I have backed off of butterflies probably over the last 6 weeks just because they're just not working right now, right? Because of the directional nature. But a double diagonal will work really well in this kind of market, and we've really stress test them to the max in bias. And so in bias, we have put on quite a few, and this is working. So I wanted to show you guys how it's working and get you to consider this trade. So this is, and you guys in bias, we'll talk about this here in just a second. This I don't know what to title it, average trade. So we made about $400 or $500 on it. This is pretty straightforward average kind of trade for a double diagonal. Now notice we did 2 contracts here, 28.10, and then we added on another 2, and we did 2 contracts here, and then we added on another 2. So kind of legged into this one a little bit. So there's only 4 contracts here and 4 contracts here. We made 400, almost $500. But what I want you to notice about this trade, check it out. I got no risk on the upper end. There's no risk up here. There's tiny risk down here, maybe $300-400, something like that. Tiny risk. So these are working, and they have a lot of width. So this was one that we did. These are real trades, and we're going to get into deeper in a second. So this was a nice one. We made about $2,000 on this one. It's in December. We did the 10 and the 7 December, and we actually had to do 3. I think we started with this one. Yeah, we started with this one, had to add on this one. Market went up, and then it turned around and came back down. So then we added on this one, ended up making a good trade on this, about $2,000. And again, notice way up here, we got no risk on the upper end. And one more, and I'll show you, this is the crazy one. So we put this trade on. This was December 14th, expiration in 17th. And after we got in the trade, the S&P went up 125 points, and then it went down 217 points while we were in the trade, and the VIX dropped 5 points as it moved, right, from top to bottom. And we ended up having to, this one in particular, check this out. We ended up having to put a butterfly in here to kind of stabilize it. And at the end of the day, all the dust settled. We ended up losing like $250 or something like that. I think it was actually $240 or something. But what I want you to notice on this trade, look at our break even down here at 20. That's 25.50. There's 26.50, and there's 27.50. So how many trades in the S&P weekly weekly trades. How many weekly trades can you be on in the S&P where you get a, 100 points down, 200 points up kind of move, and you still have this much width and you don't get destroyed? I mean, I was happy to only be down 200 bucks on this trade. It got dicey for a while, right? But that's the reason I'm showing this is they're very resilient kind of trade. You need to know how to do this trade. And you don't hear me talk about this in the SO room because I kind of keep these close for my bias people, and that's one reason. And the other reason is it's a little more involved trade. And I think I would do more damage than good just saying, pick these strikes or these expirations, because there's some twists and turns to this trade. But let's check this out. So how have we been doing? All right. So for any of you that don't know, bias is Bruce's income, advisory, service. I'm sure most people probably heard about it. Anyway, these are all bias trades. These are the real trades, real returns. Remember the disclosure, past performance, no guarantee, whatever. Compliance says I had to put that in there. But these are the real trades. And this is since August. And what I did, I apologize, it's not on a better format, but I just kind of cut and pasted these out of our returns. I post all the trades. So these are the actual returns. And this one right here I started tracking these. We changed the way that we record the trades it was at the end of July. And this is when I first started tracking these trades. So I'll give you the quick down and dirty. There's a return. So we made $8,350 since August, but it gets better than that. Let me show you. I want to break these out kind of in smaller pieces. These are the most recent ones, trade number 606, 604, 602. The reason the numbers aren't in sequence is that we have other trades that are not SPX trades, like Amazon or Google or whatever in between some of these, in case you're wondering. But anyway, these are the returns. That's the one. That's the biggest loser so far. We lost 240. That's the biggest winner. Ironically, they were back to back. And some of these other ones have tiny losses. And I think this was in August or maybe September, we had 7 winners in a row. So we made 600, 800, 400, 700, 600, 400, 200. That's pretty typical for this type trade. And again, this is a pretty small risk trade. And okay, so the first one I did start tracking, it was on the 24th of July. Again, that was trade number 568 right there. We made $540 on it, So let's see how we did. So here's the overall total profit, $83.50 in 5 months. Keep that in mind, 5 months, right? Average cost per trade, $34.51. Average profit. That doesn't sound like a lot, does it? $400. Who cares about that? Well, it's $8,300 when you add it up in 5 months. And look down there at the bottom. The biggest loser was $240, right? Which is an average return of 12.73. That doesn't sound like much. Singles and doubles, singles and doubles, singles and doubles. Average days in trade. These are weeklies, 5 days. And our biggest profit, was 2140. Anyway, I wanted to show you those stats because those are pretty cool. Another thing to mention, just in case you didn't know or don't know about bias, you saw that was 600 and something. We started trade number 610 today, and we started with 1. So we've put on 610 trades over the course since I started bias. It's been about 4 years, I think. But anyway, we do real trading in there. All right, so that's pretty cool, right? These are the kind of trades you need to start doing and thinking about and learning because they work. And again, you guys haven't seen me probably do a butterfly, like a weekly butterfly. I don't think, maybe for a pin or something like that. But for a consistent weekly trade, I've really kind of switched gears, and it makes sense, right? And that's what I'm saying is you need to be thinking about what's working now. And it's like if you've taken any classes with me, I always show the picture of the golf clubs in the golf bag because you don't play the same club on every hole, that kind of thing, you know. But you know, and you have all your trades in your toolbox, and you have to know which tool to pull out at the right time, right? And there are a lot of other great trade setups that I'm going to pull out and dust off. I haven't used in a while, really, because the market has not been right for them, but it's getting right now. So I'm going to show you deep dive how to do them, how to use them, when to use them, and when to avoid them. That's the other thing, right? So for 2019, what else do you need to know? You got to know why you're putting on a trade and what your plan is for the trade, either profit or loss, or defending. Do you have a dollar amount of stop loss, or do you have a price target in mind, or both? Is it at 80, do you pull it at 50% or 80% or 100% or whatever? You got to know that stuff before you even put the trade on, right? Real important. Do you know why to use one trade over another trade? And I don't know, but I don't think most people know in depth why. Why would you not want to use an iron condor or a calendar or whatever, and there are various reasons, but you have to really know how to use each strategy effectively. If you don't, you just throw money away, right? It's just a guessing game. I mean, you can go play scratch offs with that kind of money if you're just guessing, right? So let's dive a little bit deeper. For 2019, big picture, how do you get all your trades to work as a system? That's what I'm focused on, right? Which trade strategies, how, when, why to place it, trade structures, how does it work? Why does it work the way it does? What hurts it? How to put them all together in a portfolio and not just a hodgepodge of disjointed trades. I see that more than anything. People will say, can you look at my account or my holdings or whatever? And I'm like, well, okay, this trade looks good, this trade looks good, this trade looks good, but they don't match up together. They're all long or they're all short or whatever. And that may be the reason, but there are some conflicting things there. But how to trade your positions in overall portfolio by management by the Greeks. I'm a big managed by the Greeks kind of guy. It makes sense. It's always worked. In fact, I've got, and I said this in one of my last classes and people don't believe me, but 30 years ago, whatever, even 20 years ago, we didn't have the technology to have all of the cool stuff we have now. We didn't have all the charting. We didn't have fib levels, and well, I guess we kind of had fib levels, but we didn't have voodoo lines. We didn't have all the indicators and all that kind of stuff because the technology, they weren't there. They didn't have them. So we managed by the Greeks, right? And you can, we got our quotes off of Quotron. If you guys have been trading that long, I got one quote at a time, right? That was it. And if you manage by the Greeks, it doesn't matter how many different positions you have layered on. You can tell if if you've got risk here or there. You can tell where, you've got volatility exposure and etc. You got to know how to manage by the Greeks, no matter what style. If you're trading options, you futures guys, that part's not as important because you don't have so much, time value and volatility with futures. But you must know the Greeks, no matter what style, short-term, long-term, scalping, doesn't matter. That tells you how the position is going to perform and where it can hurt you. So in doing that, I use the Analyze tab. If you've seen me in the room at all, I spend most of my day on the Analyze tab. And the reason is I'm looking at the structure of the trade itself. Now, getting the information off the chart and figuring out the trade type, that's step one. Step two, but before I put any money, on the line, I got to look at the trade. I got to look at the Greeks. I've got to see where my break-even points are. I've got to figure out what I'm going to do if it goes wrong, or how I'm going to make money on the trade. What happens over time? How's it going to look in a day or two or three or five? Again, you can't wing this stuff. You gotta know it, right? Again, defending trades, got to know it. Best practices, tons and tons of best practices. We all have our things that we do on a daily basis and so forth. And then really got to keep the mental game going, especially in a market like this, because it can be euphoria and then, you get smacked down and, you know, pick yourself up, dust yourself off, do it again and get smacked down. You got to keep that, you know, positive mental game going. And part of that is by sizing appropriately, knowing where your risk is. You know, we're not gambling here, right? Knowing when you got too many trades on, knowing what levels you're looking for and all that. So what do you do with all this? All that sounds great, Bruce, right? What do you do with it? Well, I always love the quote, knowledge is power. And I wish I had an award I could give somebody if you could tell me who said that. But anyway, there are no shortcuts in trading. We know that. There's just anybody that comes to trade and hasn't done their homework and thinks this is easy is, you know, going to be the one leaving with no money. You know, it's kind of like going, you know, saying I've never gambled before, but I'm gonna go to Vegas and make $1 million this weekend, right? But I've never played cards before, right? It doesn't work, right? Kind of same thing with trading. Now, that being said, I know it's frustrating, but it can be tamed and it can be mastered with, you know, some hard work, some effort. You got to put some time in. I put the quote in there, you know, and I don't even know where I heard this from, but somebody said it and it made so much sense. If a guy gets accepted in medical school and he goes in, takes his first day of classes, is he a doctor? Of course not. You know, same way with trading. You can't learn this in a week or a month. You can't read a book and be good to go. There's too many variables out there. It's the old Rubik's Cube thing, right? So I got 30 years trading professionally as a career. I've done this once before. I'm doing a deep dive mentorship. It's the second time I've ever done it. It takes a lot of time. It's a 6-week deal. We're going to get into that here in just a second. And I'd love for you to be part of it. And how are we going to do it? I think the deep dive is the best way to do it. I really do. And here's the reason. It's not, we can't, if you want to learn it all, you want to learn the whole ball of wax, as they say, or at least a program or a system that you can put to work. You can't do the fire hose approach and, you know, get it in one webinar. There's too much material. It's just too much, right? So we'll do it small pieces, step by step. We'll build on it over time. And really, this is a super small group that we're going to do. And we're going to make sure everybody is up to speed each and every step along the way. Now, it's a 6-week program, very systematic, very comprehensive boot camp. And, you know, I have an engineering background and I'm a nuts and bolts kind of, well, why does it work that way? I want to know, right? And I think you should. I think everyone should, right? Because you can know, you know, how to put on a trade, but if you don't know why you're putting it on or what's going to happen or it might happen to it, you're starting out, you know, from behind, right? So what are we going to cover? All the strategies, exactly, step by step. We're going to lay it out. Step 1, step 2, step 3. We're going to cover monthly trades as well as weekly trades. Love some weekly trades. We're going to do them, right? We're going to talk about all the trade structures and strategies, which ones are working now and which ones to use and so forth. Mentioned by the Greeks. Allocation, I get that a lot. How to allocate the portfolio and so forth. How to get orders filled, fishing for prices, commissions. You know, we're going to spend a lot of time on a lot of things, tips and tricks that you may not think about on a daily basis. We're going to deep dive in how to defend and when to walk away, how to see risk in your portfolio, how to set up a trading plan. Got to have your trading plan. You got to write this stuff down, right? Track it, go back and look at it, do the forensic breakdown of why that one worked and why that one did not work, so that next time you won't make the same mistakes. Best practices, portfolio management, and then stress testing your trades. You got to be able to stress test your trades and see if it's going to blow up on you. And you guys in bias know what I'm talking about because we stress test these diagonals all the time to see what it's going to look like the next day or 2 or 3 and see if we might, need to take some evasive action. And I know it sounds hokey, but I put in much, much more because there's just so much. I couldn't even think of all the things that we're going to talk about in here. So here's how it's going to work. It's a 6-week program. We have 1 class per week, and then we have live trading. So we'll do class live trading, class live trading, class live trading as we go. And that way, whatever we learn the first week, we're not going to learn it all in the first week. We're going to focus on, the first class is actually going to be double diagonals. We're going to learn that because that's the first trade we're going to put on. And then we'll build on that, right? And we'll go to calendars and, the similarities and differences and all that kind of stuff. And then we kind of keep going as we go. So after the 6 weeks, we're going to have a follow-up program just to make sure everybody's still, got questions or problems or whatever. So it's about 30 hours of content. I do one-on-ones, talk about individual trading, problems, issues. It's going to be a very small group anyway, but then I'll do literally do one-on-ones. I've got 3 prep videos before the program even starts that we will send out to you guys to have and really kind of get you going. So what else? We get checklists for best practices, checklists for daily routines, tons of do's and don'ts, and all kind of tips and tricks that, we all think about, how's this going to make me money? Well, that's very, very, very important. However, the other thing that people don't think about is, what if I can keep you from stepping on a landmine that costs you $5,000? And I'm saying that literally, very literally, just because, things that you might not know. And one of my original mentors used to tell me, and I should say it more often, he used to say, Bruce, you don't know what you don't know. And I would get, my feathers ruffled, and I'm like, well, I know what I'm doing. Well, you know what you're doing, but you don't know what you don't know that can hurt you. And I'm like, okay. And it took me a long time to figure it out, and he was absolutely right. So everything's gonna be recorded. You can use it years and years and years from now. This stuff doesn't get stale, right? And I think we're going to be in this same pattern for quite a while. Would be really surprised if we're not, talking the same talk 5 years from now. But I think if you want to gear up for 2019, kind of start with clean slate, get things going in the right direction. January 4th, now's the time to do it, right? And I put this in here because, it's always kind of, people ask me, well, we're going to make enough to pay for the class during trading. Well, I'd absolutely love to tell you that, but I don't have a crystal ball. We're going to try. And most of the classes that we've done, especially the larger classes, we've paid for them. I can't guarantee that. And the compliance department would kill me anyway if I told you that. And that's why I put I mentioned the disclaimers, right? But what I will say is that you will have all the tools at your disposal. You will have all the knowledge at your disposal to be able to make money, not lose money, get yourself, be more consistent, be a better trader, a little more comfort level and less stress. And that's what I want to do. So last time we did this, we limited to 50 people. There may be some people in here that were in there last time with me. We had a good time. It's a lot of fun. It's a very small group, so it's a lot easier to talk amongst ourselves. But we had 50 people and we sold out and we had a waiting list. And this kind of training is, like I said, you can take a class here and a class there and a class here and a class there, but this puts it all together and puts it as one seamless, step-by-step program over a course of time. I think that's the best way to do it. I wish I could do it all the time. It's a huge time commitment, right? In fact, a big part of that is the one-on-one phone calls that I have to make. I do phone calls and I add it up, it's like 30, 40 hours on the phone for me, but that's part of it. I don't mind doing it. I like doing it. I love talking to you guys, right? But if you're serious about it, about being consistent, getting to the next level, if you want to turn this into a career, I definitely consider this. I want you guys to start out 2019 right. I think we're in a different market. I don't think we're going to get back to buy the dip, the way it was, all that kind of stuff, right? So sign up now, right? Because simple rules can change your life. as Tony Horton tells me. So let me get back over here, and I will. Matter of fact, let me post the link to the actual sign up. Give me just a second, then we'll do the questions for sure. Let's see here. Okay, I'm just going to post this. And give me just a second. All right. There's that. Give me a second. And I'm really pleased that I've got 4 rooms open and they're all working. I'm pretty happy that we didn't have any trouble. Okay. All right. Let's get over here to the questions and see what we can do. Bruce said, Francis Bacon, you are correct. And Jerry said that too. Absolutely. I don't know if you guys are Googling or not. I didn't know that. I had to Google that. But I remember when I was in college at the library, they had it on the front of the library. Knowledge is power. I was like, that's really cool. Tim said, how do you feel about synthetic covered rights? Yeah, I like synthetics. They're a lot cheaper in most cases. I do a lot of, and I should have put on there cash covered puts, synthetics. There's a lot you can do, and there's a lot with hedging you can do, especially if you got portfolio margin. You can hedge with stock. There's a lot we can do with synthetics. So good question. Let me get over here. Z, I don't know if anybody answered you or not. Is this going to be sent out later? I am pretty sure that it will. Roy, yes. Roy says, what about the wagon wheel market here? Yep, absolutely. Covered rights, naked puts. Yep, that's this kind of market. And I think we're going to get a lot of opportunities for that, actually. And in fact, I wrote a book on that. I'll see if I can get you guys a link for that. But anyway, yeah, I am a big fan. Roy, this is not the same as the 4 income trades. Of course, the 4 income trades will be in there, but a lot more is on top of that, including the diagonals. I've never done the diagonals or double diagonal class before. Not the weeklies. I did the long-term ones a while back, which is different. I've had people tell me, well, I've already taken the double diagonal class, and you have not, because I haven't done one on the weekly version. Is much different setup, much different setup. And again, that's why I'm kind of a little hesitant to even talk about those in the room, because that's a trade you can get in trouble with if you don't know why you're doing it. And that's why I keep stressing, understand why you're doing it. That's got a big vol component of it, kind of like a calendar, and it can get away from you sometimes if you don't stay on top of it or know how to handle it or manage it or set it up. Okay, SK. SK on that big 7-legged trade. That was I'm glad you asked. That's a good question on that big one that we had with all the different pieces on it. I think that margin was about, I think it was like $11,000 or something like it was. It was by far the most expensive one because we kept having to add to it. Most of the ones don't require any margin. And I will say this, if you use double diagonals on the weeklies anyway, you'll know what I'm talking about. Depending on how your strikes are set up, you may or may not need margin. Most of these do not need margins, because in reality, There is a regular diagonal, and then there is a reverse diagonal. One requires margin, one does not. And depending on what you're trying to accomplish with the trade, and that being bullish or bearish, I mean, I can have a call diagonal that's bearish or bullish, depending on how you set it up, right? So anyway, thanks for asking that. I forgot to mention that. CV, I don't know what the commissions were on those. I don't know. I mean, standard, I put in there, I think I put, everybody pays different amounts. I think I put $1 a contract or something like that. And CV, yeah, SPX 60/40 tax, rule 1256, absolutely. RS says, is this more on the trade setup or how you defend the trades? RS, ideally, I don't want to defend it, right? So we set up those trades thinking they're going to have a pretty good width. The standard setup trade will have 75 point width, maybe 100 point width, something like that, maybe more, 125. And then we kind of sit back and let it work. What's happened a lot lately is that we'll get a runaway on one side to the up or one side to the down, and then we had to go in there and add, and take care and defend it and all that kind of stuff. And it's pretty systematic. It's not anything to panic about. It's pretty straightforward, and you can extend your width a pretty good bit. So I don't know how to answer that. It is and I wish I probably could go back and figure it out. I would say on the majority of these, we did not have to defend. And we may add more to them. We may start with 3 or 4 contracts and add to them just because we're trying to beef it up. But, and we never know when we're going to have to defend. It all depends on the market. But it is, I will say this, it is an fairly easily defendable trade, right? AG, do I have breakout sessions every day? I do not every day. I typically plan on doing breakout sessions on a Wednesday and a Friday. But what always happens, any other days that we put a trade on, I will do a breakout session and say, look, here's the trade. Here's why we're doing it. Here's the strikes. Here's exactly how we do it. And we do a Q&A just to make sure everybody's up to speed on the trade. So it varies. We probably average 3 a week, maybe 4 sometimes. It's pretty rare I do 5, but yeah. And I'm also in the SO room as well. So I do sessions in there Monday, Wednesday, Friday. Joe 6 says, Joe 6, exactly. The minute I figure out the character of the market and place trade, it literally changes character 1 minute later. Isn't that the truth? It really is. And we all get frustrated by that because it's like, I literally put a trade on, go to the bathroom, come back. Oh man, you got to be kidding me. It just flipped, and not flipped in a little bit, now we're 60 points the other way or something. I'm with you. But, and again, the whole point, that's the way it is. And we're in the new environment now. I don't think it's going to change. I think we need to be ready for that because that's the way it's going to be, right? Let's see. Eric. Yeah. Hey, Eric. I've been in the Bias room twice, 30 days each, and noticed you were not in the room every day. Yeah, I'm not in there every day. Whenever I put on a trade, we will do, and I'll send out, I text or send an alert out saying, we're going to buy this or sell this or whatever. And I'll say, well, we're going to do a breakout session to go over it. And we always do a breakout session to go over a new trade. Well, I'll say always, 99% of the time we do on a new trade. If it's just something like we have, we're taking off a leg of a trade, there's not a big reason to do it. But all right, let's see. Man, you guys were on it with the knowledge is power. Reddy says, do you trade whatever the trade you recommend or just give commendation only? No, I trade it. Yeah. I trade all that with recommendation only. No, Reddy, I'm in it with everybody. We do live trading, live money, real trades. There's no, there's no hypothetical. Bill says, what if you're not in front of the market every day? Bill, great question. Originally, funny you asked that, originally bias was structured to be a hands-off approach and more along the lines of iron condors and covered rights and things that did not require attention every day. But we have not been in a market situation for the most part. I do a lot of trades. Some of my trades will be 30, 45, 60 days out. And lately it just, we can't go out that far just because the wild swing, we may be 200 points in a day or a week or whatever, so I can't go out that far. But again, I think it will calm down. The crazy swings will calm down. We probably will have this same stuff we're in, I would say, until at least we get into the meat or past earnings season, because that's still going to be a huge what's going to happen kind of thing. Once we get in that, I think earnings is going to be not good. And I think things kind of calm down. We'll start going back to those normal kind of trades. But in general, anytime I put a trade on, I text it out. And I had a guy today, Scott Average Jim, actually, he's probably in here, and he said, "Hey, I'm in the car. What do I do?" And so you can, as long as you've got a phone or an iPad or something, you can always put a trade on. And it's not that many. We're not in and out all the time. It's fewer than that. So if you're not in front of the computer or front of the market every day, it's not a deal breaker, at least for bias anyway. So anyway, hope that makes sense. Andre, is there a certain amount of experience needed to get the most out of this, or can work for a complete beginner? Andre, it can work for a complete beginner. In fact, last time I did it was in 2017. I had a handful of people, and I'm glad you asked that, because I had a handful of people that when we were doing the one-on-ones, I would say, okay, how much money are you trading? Let's look at your portfolio and so forth. And a handful of guys were trading paper money, and they did not even, they weren't even trading yet, or not even have, real money in trades yet. And which kind of surprised me, but at the same time, I thought, you know what, that's actually pretty smart to learn this and put it to a paper account, make sure you've got it all down before you commit, money, all that kind of stuff. But the other side of that, Andre, is that the course material, you'll have it forever. So if you don't get it on, most people probably will watch it over and over and over weeks and months and years. And it doesn't, like I said, it doesn't go stale. These are the same kind of trades I've been doing 25 years ago, and I'll say this, an iron condor is an iron condor is an iron condor. A butterfly is a butterfly is a butterfly structurally, but how you trade them, again, is dramatically different. And that's the gist of, again, that I think how things have changed with this bear market and all that kind of stuff. We'll come out of it, and then we're going to get into some longer term stuff with chop and higher volatility. And I mean, I can see that the writing's on the wall, because it's based on the economic cycle. It's not based on, us trading it. We're reacting to what's happening, and the Fed has already told us what's happening, right? Let's see. David says, what is the time commitment required to be profitable? David, I'm not exactly sure. I think I understand. Well, obviously the course is 6 weeks long. Oh, the good thing, I did forget to mention it. So the classes, we're going to start after the close. I think they start at 3:30, and they will be on a Tuesday. So we'll do classes on Tuesday, and it will be, I believe, I don't have a schedule here in front of me, but I believe it would be like from 3:30 to 5:30 or something like that, or 3 to 5, right after the market closes. And then we do live trading on Thursday. So Tuesday afternoon and then Thursday during the trading, and all that's going to be recorded. So if you and I'll text out the trades. If you can't be in live trading, I'll still text send the alerts out. Darrell's probably rolling his eyes because technically it's not a text alert or a text message. It's just an alert. But anyway, so I think that you can put these trades on with less time, certainly less time involved than trying to scalp or day trade, when you really have to be sitting literally in front of the computer all the time, right? So I hope that makes sense. Marin, I'm not sure on the payment side how all that, don't know why that would not work. I don't know why that would not work, but I was going to say this too. If you guys want any kind of questions on that, certainly call customer support. You can email me. I'm at Bruce@Simpler Trading. It's just Bruce@simplertrading.com. I'm not great on emails, so bear with me, but you can always call in to customer service and they can help you. And I will say this, and I'll get back to the questions real quick. The first class is on the 15th. And so you've got a week. 1 week is next Friday, and then we actually start on the on the 15th there. 15th. But again, we will cap it at 50 people. I don't know how many people signed up yet, but I'm sure we'll get a lot after this, but just from the number of people that are in here. But anyway, if you're sure you want to do it, I wouldn't wait. If you're not so sure, talk to customer support. We've got a couple of people here that are dedicated, that can tell you everything you need to know about it. So Jiminy Cricket, what about people who have a job? Yeah, that was kind of like what I was talking about a minute ago. I mean, Jiminy Cricket, because you're in bias, we'll send out the alerts and all that. As far as the other trades, honestly, I'm telling you, most of these trades are longer term. I mean, and I'll tell you my dates. I don't mind. It's, I do 30, 45, 60, 90-day out expiration. Then you turn to leaps and you go out even further. So a lot of these, if you put a trade on, regardless of what it is, and it's 90 days out or 60 days out, a day like today, not going to make a lot of difference, honestly. I mean, you can have a big day up, big day down. It just won't affect you that far out in time. Not like you do on a weekly kind of trade, or anything shorter. Clarity, thanks. I appreciate it. Charles, how's it going? So what are the other Trader Simple going to do? Adapt the strategy or continue with? Charles, great question. What are the other traders going to do? Adapt the strategy or continue with their own strategies? I don't know, but I'm quite sure they'll keep doing their own same strategies, because here's the biggest difference between me and the other traders, is that I am focused on the income style trading, and the income style trading is selling premium and going further out and all that kind of stuff. And for the most part, they just don't go out that far in time. And again, you can take it's funny, we talk about this sometime, but it's kind of like our trade of the week. We can all say, okay, here's the stock we want to use or index, and we can all come up with different trades, or we could all use a butterfly, or we can all use an iron condor, and come out with dramatically different results, right? So whatever John's doing, or Henry, or Danielle, or Alison, or Jack, or anybody, whatever they're doing on different time frames. They're looking at tick charts, they trade it differently. And I like my way. It's been more consistent for me, and I've been doing it for 30 years. So, and here's the thing too, also, I mean, mine's not the only way, certainly. I think it's the best way. But I'll go over in detail in the program how I do allocation. And again, I don't mind telling you, it's kind of roughly like an 80-20, 80 long-term stuff to this and about 20 to the shorter term stuff, because we will continue to get these swings and the volatility's up and it's going to stay up. So doing these swing trades on smaller term time frames and stuff, the earnings and all that doesn't change. You know, what I'm talking about are the core kind of stuff that I think are going to be working much, much better going forward. Yes, Doug. Yes, it's going to be the same time every week. David, on that portfolio, on that, what size portfolio is that? It's the amount in those trades, I think you saw the average trade was like $3,400 or something like that. These, that's just one trade. Now I've been very, very light on trades. I had been putting everything or setting everything off of $100,000 portfolio size, but I've been keeping 75,000 in cash. I mean, you really could trade the whole thing we do for probably 25,000. So I hope that makes sense. And also, everything is scalable. So if you're trading bigger, then I do 10 contracts, you do 20 or 30, or widen out your strikes or whatever. Or if I do 10 and you don't want to do that many, you can do 2. Or if I use SPX, you could use SPY, so forth. So it's very scalable, right? Joe, so yeah, I'll talk about this real quick. On the buy, as far as the bias room, I'll post trades. I go over the trades. Again, we have the breakout sessions with a focus on this, honestly, on this kind of type trading. We have not done a lot of this, again, in the last quite a few months, just because the market's been so crazy, but going forward, we will. The other thing in bias, I try not to do any trades that are over, say, $5,000. So selling puts, naked puts, or buying stock on a more expensive stock doesn't fit well, it's just way too big. So I may take up $40,000 of margin on a trade or something, and I don't do that in bias. So hope that makes sense. Transit Man, if you're looking for something less intensive, what are the courses? It kind of goes back to what trades fit well together, because off the top of my head, I was thinking iron condors, honestly. Wide, longer term iron condors. But it's better to pair that up with something else. But I have a bread and butter butterflies class that's pretty awesome. I love it. It's been a very consistent trade. And iron condors. And I have classes. I have a long-term, I think it is called bread and butter iron condor class. I have a weeklies class, but that's not, you probably don't want to do that in this market, but the longer term ones work well. So I hope that helps. And also customer service can help you with, we had, at one point, I had like 32 classes online here in our online library. And I know they took a lot of them down just because they were older, and I'm probably going to redo some of those at some point, maybe this year. But anyway. All right. Simon, how's it going? Yeah, Simon. Yeah, and I know you asked this a minute ago. Yeah, it's going to be on the 15th is when we start this, and the way it will work, it will go the class on the 15th. Actually, our first live trading is on the 24th, and then we get class on the 22nd, class on the 29th, live trading, Tuesday, Thursday, Tuesday, Thursday, Tuesday, Thursday, Tuesday, Thursday, until we knock them all out. Transit Man. Yes, on the double diagonals. Yep, you can use those on SPF. I'll say this: they are almost as effective. And the reason I say almost, there's a little more meat to the bone on a SPX trade versus SPY trade. That's just a part of, it's just a function of it. but absolutely they still work on SPY. In fact, I was looking at one the other day, and I may set one up here pretty soon in bias on SPY just to give us something, just to give us a different flavor. I know a lot of people do use SPY. LC, thank you for the time. Rhonda, give me a second here. Well, I showed you how the how it was going to work with the dates. Yeah, it was January 15th. So we'll do Tuesday, Thursday, and it'll start right after the market closes. Okay, Diana, thank you. Buckeye, you do not need a bias membership. It really doesn't have anything to do with the bias membership. Fear and greed, yeah, absolutely. Yeah, bias is still around. We're on trade. Like I said, we did trade 610 today. Was our 610th trade. Ready, yes, to get those recommendations to trade out. Now I do some trades in the SO room, but the ones that I send out that I'm actually taking and doing follow up and stuff like that are the bias trades. All right, let's see. Chris, on the recommended portfolio size, you know, I would say you could safely or easily do this with 25, 50,000. I mean, it's, if you got, you know, I mean, ideally 100,000, ideally, or actually like 125 to get portfolio margin, but it's not necessary. And the reason I say it's not necessary, again, if I do 10 contracts and you're trading less money, you know, you do 2 or 3 or something like that, or use SPY or you know, and I keep saying SPX. If we're trading, I don't only trade SPY or SPX. You know, if we're trading Google, I've got a Google trade on right now, or you know, Amazon or whatever. You can size down. You know, so again, last year I had people that weren't even that didn't even have accounts or weren't doing live trades. So it's hard for me to say. Jerry, how's it going? Any thought of breaking these courses into modules? I've purchased many of the weekly, monthly income courses. Right, you should have probably more diagonals ahead. Jerry, at this time, we're not going to break it apart. It just doesn't make sense because it's all a program, you know, kind of front to back. I see what you're saying. I don't know. Let me. I tell you what. Either call customer service and ask them how the best way to do that. I just know that we're not really breaking it apart, to put it that way. But anyway, so yeah, either call customer service or you can email me, you know, if I can help you. And let's see. Let me get over here. I just want to make sure I've got all of the questions answered or answering. I'm my mind's kind of boggled from trading today. I had some trades on today, some good trades on today. But again, I hope you guys can, you know, think about this. Hope you can make it. I think it's well worth the money for what, you know, for what we do and what you get. You know, and again, it you know, if things go well, we could easily pay for that. But not only that, I mean, you'll have the strategies, you know, from now on. So anyway, they will, these are honestly the same strategies I've been using for 20, 30 years. So anyway, I hope this helps. Let me wind it up. I know everybody's kind of ready to get out here. It is Friday afternoon. I really appreciate everybody being here. And like I said, if you've got further questions, certainly email me or call customer support or both, preferably. And and we'll try to answer all the questions. We've got about another week to get signed up. I wouldn't wait too long. We ran out. We filled up last time we did it in 2017. So anyway, with that, let me wind it up and tell you guys have a fantastic weekend. I really appreciate the time. Hope you got some insight here that might be helpful. And with that, I will see you guys on Monday. Take care and have a great weekend.